because that was the one that we were talking about that probably have what we call this diamond formation. Again, when I tell you we have a diamond formation, this doesn't mean that you go and blindly start shorting the euro. No, this is a work in development, and you need to, I'm bringing it to your attention so that you can see it. And once the move happens, once you have a break below the 14035, you know that that will be the beginning of a serious capitulation, and you want to take that short and you want to stay with it. But this market will break whenever it wants to break, and it has thus far failed to go higher, so therefore we are going to allow it and give it all the room it needs until it decides which way it wants to go. Alright? So with all the decline that we had in the Swiss, and if you look at the euro for the last, even though the ones that took the euro Swiss Friday, Thursday and Friday have made a great deal of money, but if you look at the euro Swiss, the euro dollar, it actually did nothing. It didn't even give us a sell signal, nor did it give us a buy signal. Absolute nothing. It's still contained in that 2 weeks range. Nothing has come up. So the euro dollar by itself, it is that strength that you see, or that neutrality that you see in the euro so far. This is more of the result of the weakness that we have been seeing in the Swiss. So people are buying the euro Swiss. Everybody in the office was buying the euro Swiss, not because the euro was strong, but they were buying it because the Swiss was weak, and therefore there was indirect buying coming into the euro, and that was holding, that is what is holding the Swiss, the euro. And therefore when the Swiss move stops, this will be the first one to sell off. So having said that, we closed the week at 142.45. Our structure point is 142.16. So there is no reason for us, right there, that is your 142.16. And guys, if at any one single moment you really want to appreciate price behavior and identifying structural points and significant points, and how relevant they are to trading, this value here, the 142.16, this is a significant point that we have taken from the daily way back for weeks and weeks and weeks. And look what happened on the day that, on Friday, when it declined. This is where it stopped. And once you see that, that's why it is so important to transpose these lines and price points from your daily charts onto your intraday charts, because this, when you see something like this, it will prevent you from making a drastic financial mistake. Because even though you might, based on the intraday rules, have decided to go short over here, if it stops at the next structure point and it doesn't follow through to the downside, and then it begins to go up, that is your first sign that you don't want to be short the euro dollar anymore. That is the time either to take profit, and that is the confirmation that you're seeking, that you have correctly identified a good and a bona fide structure point, that the market is telling you that you have done it correctly. So therefore, if that's the case, and this is where the market has stopped its decline on Friday, there is no reason in heaven that we should go short the euro dollar unless it trades below the 142.16. That's it. I mean, if it goes below the 142.16, that is going to be our short point, and until then we're not going to touch it. So the euro dollar is going to be a short below the 142.16, 16. It is also going to be our structural short point. And if we go short right there, we are going to use it as a stop. Okay, so my short is my structure, is my stop. Again, we're going to give it a little bit of room. So there is that. Again, we're going to take it short right here, and we're going to put our stop there. You're going to be logic. I mean, so let's give it a little bit of a breathing room. And on the long side, again, there is no reason to buy it over here because it has failed to go above the 143. So we are going to buy it. Let's look at the intraday so we can get our buy entry. This is right there. This is as high as it has went. So I'm not interested either to buy it unless it goes above this price point over here, which is the 142.93. So let's make it the 143, just round it up. So we're going to buy the euro dollar above the 143, and our structure long in the euro dollar is the 143.33.7. This is the one that we have been trading, so we're going to buy it above here, and that is our structure point. And if I buy it above the 143, I'm going to put my stop below that significant point, which is the one. Look at this. I mean, this is amazing. Sometimes when I look at this, it fascinates. I mean, every time it doesn't fail. I mean, look at this. That's a significant point, which is the 142.50, right? And look where the market side is. The market side is 142.49. These are two things that are completely non-related. The market side is doing its function by counting the buys and the sells of actually what's happening in the market, and it's telling you that the flipping point of the structure point of all of yesterday's session is the 142.50 or the 142.49, and yet you have taken it from the daily chart, identified the significant point of 142.50, and this is just one thing confirming the other, and these are more signals that will give you a little bit more confidence in your bias, where you're going to buy and where you're going to sell. So in this case, I'm going to put my stop, my long stop, below the 142.50. All right, and now we have a good solid trading setup, which is again everything in the market, everything on the chart is confirming each other. So I'm going to buy above 143. My structure long is 143.33, and my stop in this case is going to be the 142.50. So I'm risking about 50 bips on this trade. On the short side, I'm going to go short below the 142.16, which is also my structural short, and it will also be my stop. Okay, that is the euro dollar.